All right, crazy ass snowstorm that we just got. I'm on the East Coast, Long Island, and I think we got like 18 inches of snow. We haven't really had much snow in like a decade, so we had a crazy one probably like 3 weeks ago or so, maybe a month ago. Same shit, like 14, 15 inches. But the good news is that the charts are still open. Nothing changes if you're a day trader. No mountains up here or over here. I have to go to New Jersey. That's like the closest spot for some snowboarding at Mountain Creek. And then if you want to go to like the good shit of the East Coast, then you got to go to Killington or Mount Snow. It's like a 5 hour drive. Or you can take a plane and get there in an hour. I don't know, the drive is kind of cool, you know? Even if you could afford a plane, it's like driving it is kind of part of the experience, you know? All right, so same shit. S&P 500 futures, 5 minute chart. I have this trend line as a potential bottom here, but since it is so close to here, I'm going to use that as it being much less probable to continue. It's not a high quality setup. It could continue down, but I'm not going to use that because it's not high quality. Because it became so close here, it's not, like each trade has its own probability if you want to think of it that way. And if I took 10 of these in this direction versus like 10 and this didn't happen yet, to me the 10 where this didn't happen yet is much more probable to continue. So I'd rather just not take this. And it's also been consolidating up here. And then when I look at the day chart, this could just all be wrong, but this is just giving me the decision of whether I'm going to go long or short. I'm seeing, so this is the bottom here. So if that's the connection, I'm seeing a hit, I'm seeing push up, and then I'm seeing a triple wick hold push up. So it's not really something I want to take a short in, more because it came so close. That's the majority of it. Like this would be the short right now. Like let's say I went, let me connect it to here and see what this looks like. Yeah, so I wouldn't even be taking this short. It'd be something like here. Matched up with this key level right here. But it's not something I am interested in. Under the weight, see if it comes down here. Test these lows here. Trend line connection. And then I'll put my target. I would draw this, I don't know, somewhere up here. But in the meantime, chilling. 9:10 a.m. candle. I trade in, it's a bonus room. So I'm right above the garage. So it's it's not very insulated. So I got the heater going. but it's like, I don't know, 20 something or 30 something degrees. But then in the summer, it's like it doesn't heat up. It's just like neutral all the time. It's like neutral and cold. It just doesn't get warm. So see what happens here. It's another trading day. And if there's no trades, then there's no trades. All right. It's coming down, it looks like. So I was writing something down, and I really liked it. I was writing down that sometimes there's two scenarios, like this reversal setup, and then this trendline key level setup. But what I've realized is that it's very rare, and it's just going to confuse me. So even though this could have been, at least at the moment, would be a winning trade, it's not something I'd want to do long term on a smaller time frame. Like the key level setup that I do, the reversal setup, is at a major key level where there is no trend line key level setup. Because this could have, let's say I entered here and then it just kept going. I would have took a loser, and if I just decided to not take that and only look for this setup here, there would have been no losses that day. It just, to me, it's about taking the majority of the setups the majority of the time, but like the majority of the scenarios. And the majority of the scenarios, there's not two setups. Just like how there's majority of the time it doesn't go above the trend line and then back down. It's kind of like me taking this one because it happens sometimes. Like it goes above and then back down. So I'm looking for just the majority of the scenarios, and I'm looking to take the majority of those trades throughout the year. I think the last one that I saw of this was, it was either October or November. Like this type of setup. It's just not, it's not the majority of them. There will be setups for that work that are not your setup. You just have to really understand that so it doesn't affect you internally. Like this would usually affect me, but I don't actually care because I know the majority of the times I'm looking for just one setup. All right, so 71 is what a target would be for me, or 41. I'm looking for it to come down to this key level here. Let's say 71 is a stop. 87, 71, 87, 71 is 16. All right, so how many contracts? Let's say 4 contracts. Looking at about 4 contracts here. risking 320 without commission and fees. So it's like 330. Still looking for it to come down. Yeah, right at this 71-ish, 72, this key level, 72. So another way I can figure out if a key level is good or not is by this trend line. Like if I move this to here, let's say, if I zoom in here, this key level right here, or this candle is fully below the open and the close, or the low and the high. Because there's a lot of key levels. So that's how I separate which key levels are actually accurate and not. All right, I got a minute and a half left for this candle to close. $74. Yeah, it's not gonna work because if I go like this, that candle down here is still below. So I'm looking for it to come down a little more. That's 71. 71 would work. Even this low down here would work. Just going off of a minimum. Yeah, so if this just stayed here and then pushed up, I would not enter on this trade. So I've lowered my risk down quite a bit. I was just risking too much and I was making errors, and that's not ideal. If you're going to risk a good percentage, you better have your edge dialed in, which is all good. If I can just take the setups going forward, I'll be all right. Still not low enough quite yet. My target would be, yes, I'd draw this, and about 41. There's a key level over there. In the past, I would think that I'm gonna miss this trade. I'm like, oh no, it didn't go low enough. But you just, in the moment, you have to see that it's not your edge. If it goes to your, um, like your level, then you can take it. But if it doesn't, then you should not take it. And it's really that simple, man. In the beginning, it's hard to understand, but once you're a couple years in, or at least just have grasped the concept of only taking your edge, then it'll be easier to not take trades. All right, here's what I'm gonna do. Let's say 70, 80, 10.25. Let's say 6 contracts. Still not low enough, so it doesn't matter. Just waiting for it to, maybe it'll come back down. So when I do this, it's just very close. Not something that I take. So I'm gonna wait for this and see if it comes down. Oh. It's probably 60 degrees. Probably 60 in here right now. All right, so I'm gonna wait. All right. So rejected here. Just stop some people out. See, I didn't take this quite yet. Wasn't wasn't low enough. Still just not quite what I'm looking for. Sometimes you gotta zoom out. Looking for it to come down to either the lows, happen at like midnight, or this key level. Or this one. The candles have to set up properly as well. So if this one happened to push down, I can enter right above it. Patience. You gotta be patient, you know? It's simple, you just wait, and if it doesn't come to your level, then it doesn't come to your level, right? See, that's extremely close. If I lined up, I would say that pretty much hit the key level. It just needs to line up correctly with the trend line. It's still just, it's a little iffy on this trend line. As close as it is just not quite close enough. We need to push down a little more. 2 minutes left in this candle. Okay. All right, so I think that is enough for it. Seeing key level, trend line. This is fine. It's plenty of space here. High 78, 78.25, 6, 6.5. Let's do 9 contracts. That is 7, 8, 6.5, like 300 something. 292 and then 9 contracts. Every contract's like 250. It's like $20, like 310. And if this enters me in, this would be the one trade for today. Low is 72.25. This is 72. I basically go with the high and the low for trade of 8 and thinkorswim. So if thinkorswim shows me a different entry, higher entry, I'm going to go with that. Or a lower stop. Same thing for trade of 8. Like trade of 8 showing me a 0.25 lower wick. So I'm going to go with 71.75 versus 72. Now I wait and see if it enters me in. If it doesn't, then I'll just move my entry down. I think what I can do is just go to I'm just in a moment here to reorganize. I'm gonna use 7 contracts here. 35. Times 8, 280. 7 contracts. Puts me at just like 300. Entered me in, and then it's coming straight down. This is what's going on. This is how she goes. Didn't take this. Potentially going to lose this one. That's how it is. This was the setup that I'm looking for. And that's how it goes. And that's the one trade for today. So it's like it can it's of course it can be frustrating to, like right now it should be one winner of last week and then a loser. And then I lost this one. But instead it was 2 losers last week and then I lose this one. Didn't take this one. But this isn't the setup that I'm looking for on a long-term basis. I'm looking for this one. It just didn't work. So I'll come back tomorrow and just continue trading throughout the month and the year. You just add up the data. Wins and losses added up.